Hi everyone, Sam Silverman, Managing Partner of EB-5 here with my partner Mike Schoenfeld. Whenever we look at any project, we're always focused on two things: immigration risk, which is getting the green card, having it become permanent, and then financial risk, which is getting the capital back in a reasonable period of time, right? So let's break that down.
The next piece is looking at financial risk. So there's lots of different philosophies out there. Luckily, EB-5, it's a very flexible program. You can use the EB-5 capital for a variety of industries, a variety of project types, and all across the capital stack. Fortunately, as a company, we screen hundreds of deals every year. We're one of the largest regional centers with one of the best presences and best known regional centers to developers. So we get pitched projects all day, every day, and it's our job and our team's job to screen through those projects and find ones that fit into a pretty small framework where we're comfortable. And the checkboxes that we're looking for in that framework, we want deals where they're already fully capitalized. We know where all of the money is going to come from before that first dollar of EB-5 goes in the deal. What does that do for investors? It makes sure that they are going to successfully complete the immigration side, because as long as the deal gets complete and the jobs are created, investors get their permanent green cards. So the first thing, it goes hand in hand with immigration risk, which is finding a deal that's actually going to be completed. And then as investors, you also want to get the money back at the end of the project. Now that project can vary in length, 4, 5, 6, 7, 8 years, depending on the project type, the stage that it's in, and how the capital is needed. So underwriting deals is absolutely critical. We look for deals that we would consider middle of the fairway deals that have already been vetted by sophisticated senior banks and by sophisticated equity sources, ones that can be proven out by comparables. So it's very easy to know what a hotel night is going to rent for if it's in a dense market where you can see all of the other hotels at a similar level, what their occupancy is and what their nightly rate is. If you're going into for sale real estate, there's lots of comparables in any area. You can see what the closest competing neighborhoods are selling for. What are those houses priced at? What are the condos priced at? And with that, real estate is a very great asset class to be able to go and do your diligence and get a good look of how the project's going to perform. On the opposite side of that are operating businesses. We get pitched operating businesses all the time. And for us as a company, our philosophy has always been, we like real estate. It's very easy to quantify the cost of the land, the cost to build when you have a guaranteed maximum price contract. And that's on the cost side. And then on the revenue side, you can quantify what things are going to sell for if it's for sale real estate, what the nightly rate will be if it's a hotel. And we think that these deals, just because of how deep the real estate market is the perfect fit for EB-5. There can absolutely be good operational businesses that could benefit from EB-5, but for us as a company, because we are fortunate enough to screen through hundreds of deals, we've come to the conclusion that for our diligence criteria on immigration and financial safety, we really prefer deals that are relatively easy to value in real estate with a direct line of sight on getting to the finish line. And Sam, tell us a little bit more on why it's so important to know how you get from the start to the finish in a project, both for the immigration and financial side.
Exactly. So confidence in execution. So if a deal doesn't have all the capital lined up, like we talked about, what does that mean? That could mean that they can't line up a construction company quickly. They can't obtain the necessary permits. They're not going to be able to get a senior loan to agree to fund the project until all of those equity sources have been identified and are committed. So we see a lot of projects in the market which do meet EB-5 criteria, but from a risk perspective, it's very risky for an investor to join a project where the equity hasn't been fully committed, the senior loan hasn't been fully lined up, or the developer doesn't have a track record of obtaining similar type senior loans, right? Or projects where they need at least 40 EB-5 investors, for example, in order for the project to be viable, right? In all of the projects that we do, the projects work if there's only a single EB-5 investor, because we can't have a situation where one of our investor clients joins a project and then for some reason no other investors join the project, and then that one investor could be stranded if the project doesn't end up moving forward because there aren't sufficient other investors who also join. So that's really what we were talking about earlier, Mike, which is just that execution, and you can really avoid a lot of that risk by picking a project that's not dependent on EB-5 at all from the start. It's already under construction. And EB-5 is just coming in to reduce other more expensive sources of capital, either debt or equity. And so the developer, the project company doing the project, they're going to get a benefit. They're going to save a little bit of cost on the financing side, and they're going to go through some headache of doing audits, providing all those additional documents and reports that we need to make sure the project qualifies as an EB-5 project. So there is work involved, but they're getting a benefit, which is they're going to save money on some of the financing cost. The kind of alternative approach that we see in some projects in the market are where they're trying to raise a lot of EB-5, but they need all the EB-5 in place before other people are willing to invest. We don't do projects like that because there's just too much risk for investors. And even though as a company, we might benefit more financially if we put investors into a higher risk project, our goal long term is just minimize headaches. We have never had a failed project. We've never lost a single dollar of EB-5 investor capital in any of our real estate projects. We've been in this space for over 11 years at this point, and we have a very strict conservative underwriting process for how we identify those projects that we're comfortable with from both an immigration risk perspective and also from a financial risk perspective.